In this market update, I'm going to talk about whether you should be buying Tesla at this point or not. Hi, Jim Gore from THOR Wealth Management. In the last week, we've had a couple questions from clients on if we should be buying Tesla, and I'm going to talk about that in this presentation. First and foremost, we do not own Tesla in our clients' portfolios today, nor do we own Toyota Motor Company, which I'm also going to have in this presentation. Part of the reason is we go back to the THOR Index. U.S. large companies are expensive according to our THOR Index. So it's not an area that we're looking at, but I'm going to get in particular about why we don't like Tesla at this juncture. First, technically. Basically, technicals you're looking at, we need more buyers out there to drive the stock up. And you look at longer term monthly, Tesla's been in a trading range since 2020. And right now you can see that dotted line, we're right at the midpoint of that trading range. So if I'm looking at longer term, since it's in a trading range, you want to sell at the top of the trading range. You want to buy at the lower part. We're in the mid range. It's not telling us anything. It's not a good buy for the company. It's not a buy or sell at this juncture. The other thing is you look at it from a daily basis. And so you can make a call here saying short term, we should buy it. And this is daily trading, which is not what we do at THOR. We're longer term investors. You can see the RSI a few months back was overbought. It was over 70, and now it was oversold, and we have a MACD crossover. So short term, it might be something that you might want to trade, but it's not something that we would recommend on a longer term technical basis. Well, now let's look at the fundamentals. Basically, what are we buying with this company? At first, I'm just going to talk about major statistics and then looking at it if I'm buying it and taking it private. So you look at the statistics here, you can see that the PE ratio for Tesla is 116 times earnings. Toyota at 7.6. So you're paying significantly more, and price of sales and so forth, and you're actually getting a dividend on Toyota where you're not getting it for Tesla. So on top section, you can see you're buying something significantly cheaper with Toyota than you are for Tesla. The bottom section is looking at growth, and you can see that Tesla has a higher growth in not only earnings, but also in sales than Toyota projected out. Now that's important because if I'm buying a company, I'm buying a long-term revenue stream and I want growth in that business. But notice here that Toyota is still expected to grow in sales. The earnings not so much this year, but their sales are going to grow, and that's what you want from a company. Now, the question is it worth paying for a little bit more sales for Tesla, get a little bit more in sales, the higher price for Tesla? Well, a way to look at this, as I said, is looking at it from a private market. What if I wanted to take these companies private? What does that mean? Well, if I wanted to buy Tesla right now, it's $895 billion I would have to pay to take it private. For Tesla, $252 billion. So I am paying 3.5 more times to take Tesla private than I am Toyota. Sales. Even though I'm paying 3.5 times more, I'm only getting 1/3 the sales in Tesla than I am Toyota. Net income. You can see here, over the last 3 years, ending 2023, because I don't have the data for 2024 yet from Toyota, $33 billion I'm making in earnings from Tesla. I'm making $64 billion from Toyota. So I'm getting half the amount of income. I'm paying 3 times the amount more for Tesla, and I'm only getting half the income. If nothing remained the same, just to show you how much more expensive it is and how long it takes you to get your money back. So if those earnings just remain constant, it would take me 81 years to get my money back in Tesla, 11.7 years with Toyota. Now, so I mentioned, when you're buying Tesla, you're buying something longer term for growth. That's why people are doing it. And sometimes you want to buy growth. Our models are saying you don't want to be in large company, and especially large company growth at this time. There are times that you want to do it. This is not one of them, according to our models. So we would not even look at Tesla because our models are telling that. But the other thing that you have to look at is their growth. Some important facts. BYD is a Chinese automaker. They surpassed EV sales and had higher sales than Tesla. And some people are saying their cars are much better than Tesla's cars. What's going on with the growth in 2025? They're expecting a 12.5% growth. I think we've reached an inflection point with electric vehicles. In Europe especially, you see electric vehicle sales have dropped 3% in the last 3 months of 2024. That's according to the UK Telegraph. Europe, they're not buying the electric vehicles. People don't want them as much as they are being forced to buy them. In the United States, our electric vehicle sales were up 7.3% in 2024. Hey, that's great growth. Well, it's much lower than the 12.5% that they're expecting, analysts are expecting for Tesla this year. So if they're not going to get that 12.5%, you have to dial down your projections on what you're going to pay for in that company. China is a big market for Tesla. And with BYD right now increasing their sales, and also look at what's happening with tariff wars, people in countries are saying, I don't want to buy American. And that's showing up. Tesla sales in January were down 11.5% in China from year over year. That's a drop. That's not a 12.5% increase in sales. That's an actual drop in sales. So the earnings estimates might be way off base for Tesla based on what we're seeing not only here in the United States, but also in Europe and in China, where they're losing ground to BYD. And the last thing, and I don't want to get political, is the brand tarnished? Because you're buying the name of the company. Tesla is Elon Musk. And when you get involved with politics, that can hurt your brand. So is it worth paying that price for it when they're suffering in sales and paying an over premium? In our opinion, fundamentally, it is not worth that premium at this juncture. If you have any questions or concerns, as always, reach out to us at THORWealthManagement.com or give us a call. Take care and talk to you in a couple weeks. Subscribe to the THOR channel today.